What is going on, guys and girls? Hope everyone is doing well and staying safe. Hope everyone is doing well and staying safe. First of all, if anyone is wondering why my eyes look dark and baggy, it's because I have not slept for the last 36 hours. I have been busy crying into a pillow. The bears have taken control, and the wick-off distribution pattern that we have been speculating on since the middle of April has ended up playing out, resulting in Bitcoin having around a 50% drop from those all-time highs of 64,900. So in today's video, I'm going to be talking about what I expect to see next from Bitcoin, the different scenarios that end up playing out, because if one thing I can tell you for absolute certain is markets go up, and if they're not going up, they're going down.
What? What the fuck?
All jokes aside, the reason why I need to talk on all the different possible scenarios is this is a common misconception by inexperienced traders, is that you need to be right every time. That's not the case. You don't need to be right every time to be consistently profitable. You will never be right 100% of the time. Otherwise, we would all be multi-billionaires living on private islands, flying helicopters like Jordan Belfort. I want to dig straight into the charts and talk about the different scenarios that I see as the most probable of playing out. There's three scenarios that I can see potentially unfolding over the next coming weeks and months. And I want to highlight two possible bullish scenarios and also a bearish scenario, which is also high probability of playing out. The daily chart on Bitcoin is very obviously in a bearish trend. We've just formed an extremely large lower low. It's undeniable we're in a bearish trend and the bears are in control at this point of time. So in order for the bullish bias to play out, we're going to need to see some strong development before we actually start to get that bullish move from these levels. I'm going to put a quick pause on this video. I hope everyone doesn't mind. If you're interested in what you're hearing about, you want to learn more about investing, in trading, in the psychology behind it, make sure to check us out in the link below at www.tradingmasterclass.com. So hopping straight onto the chart, we're going to go straight into this daily, where this is the wick-off pattern that I've exposed in live events and also in a couple of videos as well over the last sort of week or so. I noted this back in April and was sharing it over social media, etc. And we've ended up playing out pretty much perfectly to a T. If we look at the wick-off distribution schematic number one, this pattern is exactly what we saw develop on the Bitcoin daily chart. So what this wick-off distribution pattern shows us is how the whales are moving this market, what the whales are looking to drive price to, and it gives us an indication of how smart money is playing these opportunities to make the most amount of profit. We know, like the currency space, like the commodity space, which is one of the most heavily manipulated assets that exist, we see these patterns over and over again. And what this pattern represents is the smart money, the whales, the market movers, taking their profits and trying to get their exposure down on the markets in order to drive price back down to levels where they can then start stacking back up. So it's extremely important to understand the reasoning behind why we see this pattern forming over and over again, the distribution, the accumulation, and exactly how we can play that to our benefit and trade like the institutions. So anyone who has studied smart money concepts or how institution capital works, how the whales move the markets to exactly what they want to see, we'll be very familiar with this sort of pattern. We'll be very familiar with what the sort of price action that we've been pushed down into. We're going to briefly talk on this pattern a little bit further, and then we're going to dive into the scenarios and discuss exactly what the scenarios are and the probabilities of them playing out. So firstly, what we can see is this is where this bullish move started from, right? This is where this huge bullish move where we saw around 150% gain, 125, 130% run from these lows. After we had this pullback, we've seen 125% run up to those all-time highs of around 65,000. So in order for market makers to manipulate price back down to these levels to be able to get in at value and trap people on the wrong side of the market, because that's what they're doing, they're looking to liquidate positions in order to create the liquidity to then drive the markets in the direction that they want. So this is exactly what we saw over here. Price was manipulated, pushed to the downside. You're going to start see retail traders selling off at these positions, which is going to start liquidating prices. People are going to have their stop losses around these levels. So whenever we have these large patterns play out, the levels that we're always looking to pull back to which we call order blocks, is wherever that run started from. So what we can see to absolute T is we had this large bullish move. We started getting this wick-off distribution schematic pattern playing out, and price has been driven perfectly into this order book of between 29,000 and around 33,000, which we've been talking about as a scenario over the last couple of weeks. So we've had that initial spike into this level. We've come back down. There's going to be a lot of stops around this level as this is where the momentum started from. It's where this parabolic run really started. And we've seen price spike back into it. The positive part of what I'm seeing for a bullish bias, for a bullish thesis that we're developing, is how markets reacted when we got in this order block. And we've had a huge amount of bullish momentum. This shows to me that it's highly likely that the market makers and the whales, the institutions, want to continue to drive further bullish momentum. They want to see this price because of how it's reacted to this order block. We've seen this huge push to the upside. It's very likely that eventually, after some weeks of consolidation and development, they're going to want to push it in the direction of the upside because of how markets have reacted once we've reached these levels. Before we move on to talk about the scenarios, let's quickly just talk about exactly what this pattern represents a little bit deeper. If a whale, someone who has huge amounts of capital to implement in these markets, want to take profits and get out of their positions, reduce their exposure because we've had such a strong parabolic move, they can't do it all at once. They don't have the same capital as you or I, where we can just sell instantly all of our holdings and then there would be absolutely zero impact on this market. If you have large amounts of capital in this market, and I'm talking hundreds of millions, I'm not talking in 7 figures, we're talking 8 figures, 9 figures and above, you're not going to be able to get out all at once because what that will do is start to flash crash the market. Your average sell where you're getting out of the markets is going to be at much lower prices, and you can start manipulating price to fluctuate it so that you can, in all this consolidation, remove the majority of your risk which you want to get out of these positions and bank that profit. To back up that, we can have a look at the whale addresses. So if we start on 10K balance and above, this is how many wallets have a 10K balance and above, 10K Bitcoin and above. What we can see from smart money is they're taking profits off the table early. So when we have a look, let's zoom into when we zoom into exactly where the sort of peak of the number of whale wallets with 10K and above Bitcoin in started taking profits, and that number starts decreasing. We can see it was around that 20,000 region as we're approaching those previous all-time highs. So they've been taking profits off the table right from the beginning of this bull run realistically, and in the entire time they've been then removing their exposure, banking their profits all the way back up. We're now finding some support here, which is an interesting concept which we'll talk about in a little bit. When we have a look at the 1K balances, these guys are a little bit later to the party to start taking their profits, and we peaked around February this year, early February, where we can see that there was the maximum amount of 1K wallets. So when price was around $45,000, we've seen around 125% gain over what the recent all-time high was from December 2017. We can see that the wallets at this point start decreasing, which shows to us that the whales are taking their profits. And what was really obvious is as we're starting to consolidate and forming this pattern, that profit taking has continued. So we saw the peak at the 8th of February. If we go back to this daily chart, when did this pattern start forming? 21st of February. So they've been taking their profits off the table, which is what's forming this distribution pattern and confirming that the whales have been manipulating price to be able to reduce their exposure, and they want to drive price back down to levels where they can start accumulating again. So, as I touched on, we've seen this move perfectly into this order book, taking out all these imbalances on the way up, liquidating a ton of positions, and we've also broken this very strong structure that we formed at these previous lows over the last sort of 2 months or so. So let's talk about the scenarios that I can see playing out. We've got 2 bullish scenarios that I personally see and 1 bearish, which seem the most obvious at this point. We obviously still have a lot more development before we can get a really clear idea of what's going on, but we need to be able to understand the scenarios that can develop and how we can take advantage of them. So firstly, the least probable bullish scenario that I see playing out is something that a lot of people are speculating on, and that is a V-shaped recovery. So a lot of people are just expecting, similar to what we saw on the S&P 500 in the equity space back in March 2020. When the global crisis started happening, we saw those huge sell-offs, and then price just had that massive V-shaped recovery, and we're just continuing up into all-time high and all-time high with huge amounts of bullish momentum. I personally think that's a very unlikely scenario of actually playing out. It's a possibility, but I don't see it as very probable. And the reasoning why is because one, this daily is definitely undeniably in a bearish trend, and two, we just have so much resistance up at these levels that it's a lot to just blow through everything straight away. And the third part is when we start thinking about these institutions again. Do we really think that the institutions are done manipulating price? Do we really think that they've managed to fully expose themselves to the next bull run as much as they want? Or are they going to continue to trap people, build liquidity in the market in order to get into those large positions, which takes time to then drive the price up further and start to see that next wave of momentum that they want to create? So a V-shaped recovery, it just doesn't make an awful lot of sense for me. If you're an institution, you're a market maker, what you're going to want to do is start manipulating price so that you can continue to get in from these levels, trap some people on the wrong side of the markets with some little false breakouts, liquidate their stops, grab their liquidity back at this order book, and then drive price forward. So that brings us on to the next bullish scenario, is exactly what I'm expecting to see. I'm expecting to see, and this is going to take weeks, this is going to take months in order to develop, but I'm expecting to see some sort of accumulation pattern coming down here where we're going to see some false breakouts. We're going to see some false breakouts of this level most likely. So if we go back to the wick-off patterns, we can see here the accumulation schematics and what that could potentially start to develop as so. And we can see the manipulation. This is going to trap buyers into the market. We're going to come down, liquidate their stops, and then we're going to see the institutions buying and buying. We're then going to manipulate it and see some sellers get trapped on the wrong side of the market, push it to the upside, further consolidation to make people lose hope. That's going to get the weak hands out the market, whereas it just chops around and people don't like the indecision because they don't know what's next. And then finally, we'll see that drive to the upside. This is something that I feel is very likely to play out to allow those institutions and that smart money to position themselves exactly however the fuck they want, because they run these markets. So if we start having a look at the 4-hour chart, it makes the most sense to look at this as a line graph, not bars, as it gives you a much clearer picture of what this can look like compared to the pattern. We've already started forming the beginning of this potential accumulation phase. And like I said, this is going to take a long time to play out. This is the sort of price action that could develop. It will take longer than this to develop. But this is the sort of price action that we have already begun to see and what we could see develop further before an actual move. And you'll see that we have to be patient in these markets while this develops. This is what I want to see play out, because this is going to give me real confidence in the structure, in the price action that's forming. What a lot of people don't talk about is when we go back to the 2017 bull run. We go back to that 2017 bull run. There's a very immature market. This run was driven purely from FOMO and speculation on price just continuing to increase. So what we see is a massive parabolic run followed by a blow off top. We actually have some structure in the markets right now because the markets are maturing. There's bigger players involved. The market cap's much higher. So it's actually developing real price action versus just parabolic run followed by a blow off top, which is great for the longevity of Bitcoin. If you're a long-term speculator, a long-term holder, this is great that we're starting to see this mature price action. So I've talked about the bullish scenarios, the two possible bullish scenarios, and the bullish scenario that I really want to see, which is deceleration, exercise patience, allow the manipulation to happen, don't get caught up in it, don't get exposed to it, and then actually get in once the institutions are starting to show their cards. So the bearish scenario that I see present, as I touched on, there's no denying that bearish momentum is in control of this daily chart. The technicals are clearly bearish, and anyone who says otherwise is delusional. So what will usually happen when we form this strong lower low, we'll come back up, we'll form a lower high, and we'll come back down to these levels. So if we start to see strong bullish moves from here, we've got a huge amount of resistance above, up at this 43,000 level. We also have this level around 45,000, and also this break of this structural low where we can start seeing some order books here. There's going to be liquidity where people have sold the market up at these levels on this break, which if the market makers wish to, they can push it back up, liquidate those stops, and then trap in some buyers, and then push it back down to these levels to manipulate it back to those levels where they can get those good entries in order to be positioned exactly how they want. So there's a lot of resistance above for us to actually break through. So if we start to see some strong bullish momentum over the next couple of days, and this happens quickly, I personally strongly believe the bearish scenario is the likeliest to play out, to actually push back up, find some liquidity over here, back above this structure, retest it, take some stops, trap some bulls in, and then we can see this push back down. So I want to see price continue to consolidate in this sort of range between 43,000 and 30,000. That's what I would love to see, building that accumulation pattern. And that will give me much more confidence in a bullish thesis. For the bearish thesis, if we start moving bullish to the upside pretty quickly, I personally believe we can at least push back down to these lows, and if not, get a further push to the downside. There's still a lot of imbalances that haven't been taken out. There's a lot of liquidity over here, which we can see, which there's going to be a lot of stop placements. So if we do break down these levels after retesting and gaining this liquidity here, it's very likely if we do break down these support levels that we're going to see price then falling. And realistically, there isn't an awful lot of resistance over here until we're hitting sort of back up to these 20,000 regions where the previous all-time high was. We've got some nice support around this 23,000 region where we can see little pullback before this bullish run. That would be the first sort of order block that institutions are going to be looking to drive this price to. So that gives you an insight into the possible bullish scenarios, the possible bearish scenarios, the fact that we need to be patient in this market. Don't just jump in as soon as you're seeing market push to these levels, because this isn't moving with the same characteristics as what we've seen in previous bull runs, because it wasn't a mature asset class. It didn't have any of this structure. It didn't have any of this price action. So this, for a technical trader, is amazing that we're seeing this development, because we can actually get a much better idea of what's going on, other than just saying, okay, well, it just continues to go up and then we see these massive corrections. This is great for Bitcoin, for the longevity of Bitcoin, that we're producing this structure and this strong price action. Watch how price develops over the next coming weeks and months before we get a clear picture and an idea of exactly where we're expecting to see Bitcoin go next. I hope that makes sense. As always, I've had comments on that XRP video of people going, oh, this hasn't aged well, blah, blah. I highlighted the negative within that, and that's exactly what played out. That's why I highlighted that negative. As I said at the beginning, anyone who thinks they need to be right 100% of the time is a moron, and they have no experience in the markets and have just not got to the point where they have to understand this is all probability. You're trying to get the edge on the right side of probability, and sometimes it's not going to go in your favor. So it's important to understand the scenarios from both sides, which is why I'm showing my technical analysis on Bitcoin, in order so that you can understand the possible scenarios that might play out. And then you need to figure out exactly how you can take advantage of that. If you've enjoyed this video, make sure to hit the like button, subscribe, hit that bell button, and leave a comment below if you've got any questions that have arisen from this video and any ideas of what you would like to see next. But I hope you have a fantastic weekend. Happy Fun Coupon Friday, and see you all soon. Peace out. Take care.